Hey guys, how you doing today?
Morning, Scott. Doing really well, thank you. How are you?
Yeah, really excited today. I was kind of hoping it'd be a boring day. I got some stuff I wanted to discuss with you guys about next steps for improving the system. If this setup that's forming up here now doesn't play out, um, I'll get started on it and I'll brief you all.
Excellent. Looking forward to that.
Yeah, me too. Me too. Yeah, I had a really good session with Ralph. He had some really great ideas, like he probably should. And you know, yeah, he wants us to help him improve what he's got. He's got some ideas, and yeah, I think there's a significant amount of juice we can still squeeze out of this. I think we can, if we can take another 25% off the top, or add another 25% to the pie, pay for the brokerage, then it really does start to look incredible. It starts to go from being amazing to incredible. So I'm excited not to rest on our laurels and get after it.
Well, it looks great already. So any improvement, I'm going to be nothing but happy.
Yeah, me too. Me too. Me too. Okay, so I don't really need to tell you guys, but you already know we've got Bollinger Touch on 3 time frames. This is going to be a higher close in 10 seconds, I think. No, it's not. Maybe. And the bar order. So the close was 656. Equal close. So we haven't got a higher close. We still need a higher close, lower close, or a hammer candle. I'll prep a hammer candle order just in case. So that would be 86.5 and 82.5. So that would be 4 for 4.5. Okay, this doesn't look like it's going to be a setup now. Just for your understanding of price action, anytime that you have a hammer candle and it breaks the high of that hammer candle, it should be attempting to paint a reversal. When it does not paint a reversal, it's extremely suspicious for further upside. So the highest probability is that this breaks these lows now. And also, because this is not unequivocally a downtrend, like it's probably a trading range of some sort, highest high in 25 bars, which is probably here. So in practical sense, any setup is high and tight at this point. And we have sideways high volatility market, which is our best market in terms of market type. That was annoying. If this was a higher close, then we would have had a really nice setup. But it was not to be. It's no longer high and tight anymore. Breaking above here. But we still have to be alert for pullback.
Hey, Scott, it's Anthony. How you going?
Good, mate. How are you?
Yeah, good, thank you. Just a quick question for you. So, seeing it's made a little bit of a new swing high here, how much weight do you put on that when you're assessing high and tight?
Okay. So it's the highest high in 25 bars. And I believe
Okay.
that up here. So the default idea is highest high in 25 bars.
Yeah.
So the stuff that I've got to discuss with you today is Ralph and I are kicking around ideas for improving the system. The ES is slightly different than Euro USD because it's like it's 4 ticks a point, and it's very common to have a 4 tick range hammer with a directly halfway thing. So the hammers and shooting stars do not work the same way as they do. So we've looked at a big set of data now, and hammers and shooting stars really perform very well on Euro USD and other currency markets, and they're underperforming on ES. So our tentative hypothesis is that there's something screwy about the points that's making the hammers look different. So we've got to come up with a new trend following setup, which there's a number of different ways we can do that. The other thing that I think is low-hanging fruit for us is trending, and Bollinger trending confirming evidence are effectively trend following setups. We should, in theory, be able to go for a bigger win. So I think there might be a possibility of going for 2R wins every now and again. And I think that would really, really make a big difference to the results. And I'm kind of excited about that. And I'm open to ideas, but what I propose to do is to just eyeball it and us all go back through. I'll sort a copy of the data into trending, and we just go back through and just take 50 each and just eyeball our best guess as to what MFE is, maximum favorable excursion, and we can make a histogram of it and see, are we getting any 5Rs, are we getting 3Rs, is it still just 1.5Rs, like is it worth expanding out the target for that, and is it going to change the win rate?
I'm happy to be involved, mate.
Yeah, and yeah, it'll be good for you guys to do some work with Ralph. I mean, he's like, yeah, you know, a legend, like a literal legend of the hedge fund world. So yeah, and you know, the general way is we do the grunt work and we share in the results. So I'm kind of happy with that. He never told me who he was when he worked with me he'd been working with me for like 4 months before I figured it out. I'm like, motherfucker, is this you? He's like, oh, yeah. It's a really humble guy. Okay, we may get a setup here, but all right. We've got 30 seconds to go. This is going to be a setup. 97 and 6 is 9 for 10. Time to prep the order. Okay, let's see. All right, everyone placed? Hey, Thomas, I haven't had time to test the new high and tight rules, but I've been following it, and they look kind of good. They look better, certainly better than anything I've come up with. So yeah, it'd be nice to get that one nailed down too. Yeah, I'd like to help Ralph with his stuff first, though, because it's having him as part of the group is just an amazing resource for us. Because I learn a lot I learn a lot from my calls with him. So I'm sure you guys will benefit from associating with him too. So it'd just be nice to bring him into the fold a bit. He's also planning on doing this institutionally, so it gives you it's just nice for you guys to meet people in the industry, right? All right, so we're going to have to resize this pitch at the next one. So this is going to become 90 and, oh no, it's not going to become 90. Oh, shit, 679. Okay, I can't place that order without it fucking with me.
Order cancelled.
That was a bit ass-puckering waiting for a fill. We're on now. Is everyone filled? So what happened for me was I had this order and I was prepping a new order, but I didn't have time to cancel this one and replace that one. And by the time this had happened, it dropped down. I personally make a decision never ever to chase trades, so I just left it as a limit order and placed it here. Got a fill, so I'm filled now. I'm just going to check that everything is in the right place. So that is 6. 98.5, so it's 7.5 7.5 for 8. So target should be 90.5 for me.
Hey Scott, just while this trade progresses,
Mhm.
I've been trading it for every day for a fair chunk of hours for the last 3 weeks.
Mhm.
And the one thing I've noticed is when we go into decreasing vola, so
Mhm.
we're hunting for hammers and shooting stars, you can sometimes get a nice retest variation around the moving averages. So you can get a spike low,
That's
a higher
that's
close, and a
exactly
lower
what,
close that doesn't break the spike low.
that's
It'll
exactly what I'm thinking. That's my highest probability guess too. So an example of that would be, you know, higher closes, lower closes, long here, stop here. Is that what you're talking about?
Yeah,
Or,
and I've especially noticed it when it's decreasing vola, because I guess you're paying more attention to the price activity around the moving averages, but you're looking for, obviously if it's decreasing vola, the price action's fairly weak. It's unlikely to get to the opposite Bollinger. But if you can get a retest variation around the moving averages, they look pretty good. So I've
It is pretty
started
good.
recording
And
those, and I'm gonna go back next week
I
as
built a
far as I
four.
can in trading view and just do a walk forward and see if I can see how many I can see to see if it's an edge or not.
That would be really useful. What I do when I'm just edge testing is just get out a pen and paper and don't put in the numbers, just eyeball it and just have win-loss columns and just go cross hatch and
Okay.
you can just bang out 100 trades really quickly without writing anything down, and that gives
Yep.
you an idea of now, it's interesting what you're saying about doing it in decreasing volume mode, because I built a system for the 4-hour charts around that exact thing, but before we came up with decreasing volume mode. And it was a pretty reasonable edge just on that. It was like a 60%er. It was in the ballpark. So I'd ideally like to see a bit more frequency than we're getting right now. So yeah, so I'm open to both those ideas.
Yeah. No worries.
Scott, would you mind just hiding your object tree just so the charts are full screen?
Sure. How do I do? Over here. Hang on.
On the yeah, it's one of those icons on the right.
Does anyone know how to get rid of this bid article?
Yeah, right click on them.
Thank you.
And go to settings. And then you'll have show buy sell buttons. One down.
Yeah, thank you.
That one.
And is there anything else we don't want to know?
Now they added those buy sell buttons a couple of weeks ago. They did an upgrade.
At least they're working on it. So we've hit the winner. You should all be out by now. Sideways high volatility markets are the best market for our system. You can see, while we're in this sideways high volatility market, you almost don't need a setup. You can almost just enter on a Bollinger Touch. Whereas, in these markets, you categorically can't enter on a Bollinger Touch. So it's a very different thing.
Scott, it's Julian. I noticed you mentioned John Garcia's 20-day rolling period, and I looked at that and I thought it looked pretty interesting, but I didn't really have, I'm not at a level where I can contribute that to that much. What were your thoughts?
Well, I think it's quite clear that that's repeating behaviour, right? Like that's. Let me bring it up. I don't think it's an accident. I don't think it's. I think the 20-period rolling win rate is better than the 20-period rolling expectancy. I've been using 20-period rolling expectancy. His win rate seems a lot more accurate. I think when it drops down below 50 and then comes above 50, I think that's probably a good time to add position size. And I think when it is where it is now, it's probably a good time to, you know, if you're using discretion, stop using discretion, to potentially drop your position size or certainly raise it at above.
Are you sharing that, Scott? I can't see it, but I might have a problem at my end.
No, it's me. I'm an idiot. The default thing should be me being an idiot. So, okay, so we have 20-period rolling win rate, right? This is a big set of data. You know, it doesn't get much better than this, right? So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 times. It's hit and reversed. I mean, it does go a bit below here, but these aren't for very long. You know, I'd be comfortable adding anytime you see it go down and then hit the 50% again. Add here, add here, add here, add here. Not quite optimal and fucks you around for a little while, but whatever. Add here, add here. If you're looking for ways to scale up, I think that's better than what my ideas in the past have always been. You do 20 trades with one mistake, and you get to go up. And I've had some unpleasant emotional experiences with that, like you know that oh fuck I'm a victim feeling when you raise size and you immediately hit 3 losers. Like, oh poor me, oh it's so unfair. You know, that kind of
typical, yeah.
Well, but that particular sort of loser of thinking is really loser thinking, right? Like it's victim thinking. It's like the markets are against me. It's so unfair. You know, that's really a short hop, skip, and a jump from the Fed's rigged everything, and you got to buy gold and Bitcoin and nothing else. And fuck, it's all so unfair. You know, the bankers stole it all. Like you know, and if you know any traders who think that way, they're 100% losers, right? Like, so, and this thinking is, you know, it's unfair. It happened to me. Oh, wouldn't you know it? I raised size and then I got fucked. Fuck, so unfair. That's just loser thinking. You know, you just got to not think like a loser if you don't want to be a loser.
So basically, anytime it gets to 0.5.
That's the way. Anytime it gets to 0.5 and then goes back above, because it can stay at below for quite a while. I mean, there's no guarantees in this life, but that seems like that would be my best guess. I didn't want to bias your best guesses with my best guess, but now I've done it because,
yeah, your best guess is better than my best guess, so I'm happy with that.
Well, maybe it's not. You know, I mean, if we look at the significant parts of this system, I think most people would say that the most elegant and beautiful part of the system is the trending definition. And I spent 6 fucking months of my life on that. And I mean working multiple hours every single day. And I got precisely nowhere. Fucking student did it first go, just about first go. Like, you know, it's a very small iteration for what he came up with. So, you know, there's not necessarily saying that my idea is the best ideas. And one of the problems you guys are going to run into as you eventually design your own systems for your own purposes is that when you're used to a certain type of setup and a certain way of doing things, it's extremely difficult to conceive of setups and ways of doing things that are outside your experience. And you're going to want to build systems that look like my systems. with a few sprinkles on top. And that's not always necessarily the best way to do things.
Interesting.
So one of the things I like to do to research system trading ideas, I read academic papers. I look at the people who are big shots in system design in institutional world, and I go back and I Google papers that they wrote as universities, as usually as postgrad students, and yeah, usually there's very thorough expositions of real edges in a lot of academic papers. Thomas, I did add to my gold position on the pullback, and I'll show you the setup I took. So what I've been doing is, for a long time now, like nearly a year, I've been waiting for a short setup in gold and then taking the next long setup. Significant low, higher close, lower close, long here, stop there, added to the position. I added to it here, added to it a couple of times before, added it. So when did it start? It started in September. Yeah, I think I got wrong here or here.
So sorry, Scott, you said you were looking for a short and then took a long?
So one of the things that we know about higher time frame decreasing volatility markets, it's not a decreasing volatility market anymore, but it was until recently, is that they're likely to go and go and go. And one of the things that we know for sure about them is that one of the best signs of a bull market in any market is that short setups look great and fail quickly, and long setups look like shit and tend to work. So if you look back at the last year of sort of price action, there's been some really cracking looking top picking setups. I think that's a nice top setup. Didn't work. That's a nice top setup. Didn't work. Lots of top setups that didn't work. So what I do is I wait for a top setup, and then I take the next. I wait for a bearish setup, don't take it, and then wait for the next bullish setup. So an example of that, which I didn't take, would be significant high and lower close, higher close, short here, stop here. Don't take that one. Instead, significant low, higher close, lower close, long here, stop here. But I did take this one, higher close, lower close, after the retest concept here. It's just a it's a neat bull market system I developed years and years ago specifically for bull markets. And what do we know about bull markets? The surest sign of a bull market is not some sort of indicator or technical analysis thing. It's just that short setups suck and long setups work. That's what a bull market is, right? Like if you look at the if you look at the stock market for the last 10 years, let's make it a monthly chart. That's a great short setup, monthly short setup in 2018. Didn't work. That's another great setup. Worked for a little minute. This short hasn't worked at all. And in comparison, the longs work great. You know, hammers. You know, if you bought every fucking hammer over the last 10 years, you'd be rich as fuck. Hammers everywhere. Yeah, so it's just a neat concept.
Time frame preference, Scott?
I like daily because it gives me because I don't have the time to monitor things intraday, and I don't like doing that. And discretionary, this is sort of semi-discretionary trading, right? Like it's systematic, but it's still ultimately discretionary trading. So it's still a shit thing to do, right? Like,
Well, you've got rules and you've got a setup and you're going with the trend. So
yeah, I've got rules, I've got a setup, I'm going with the trend, I've got an edge, but ultimately, I'm deciding, I didn't take every setup. I only took the ones that I really liked. So ultimately, there's still enough. There's enough discretion in that that if I want to be a fuckhead, I can be a fuckhead. And ultimately, like we've all experienced what it's like to be fucking trading like an idiot, and there's no time more dangerous for idiot trading than when you're making a lot of money. And I'm having a really good year. I'm making a lot of money this year, and I have to be really, really doubling and re-tripling my game.
do you ever look at weekly or monthly setups, or you mainly just stick to the daily time frame?
Mostly daily, but when I get a good one, if I'm doing discretionary trading, I like to roll it up in time frames. So so I roll, if I can nail a nice entry on a retest, I will work it up to a weekly time frame, and if it becomes a big winner, I'll bank some profits and then try to stop on the monthly. And on gold, my stop is at the yearly lows now. So I'll show you how my gold setup works now, because I caught an entry in September here, which was basically here, and I've been able to roll it up. My stop is here, which is a hell of a long way away. But at the end of this year, my stop will roll up to the yearly low.
Right.
And I'm going to manage it on a yearly basis. If I look at that chart, does it look like it's going to be higher or lower next year? I think it's probably going to be higher. Probably. Yep. Who knows? But I would say so. I certainly wouldn't short it. Thomas, I don't know much about cycles. I've never had, I know some people I respect, I write into them. I personally don't like any prediction mechanisms that tell you what's going to happen, because they really mess with your head, especially with me. I'm much more comfortable with edges that aren't strong, that aren't, put it this way, I find Holy Grail easy to trade now that it's a 60% win rate system than when it was a 70% win rate system. So, before I used to expect to win, now I'm not. Now I don't quite expect to lose. But if you've ever traded, like my long-term system is 25% win rate system, and expecting to lose is like it's a really weird trip. Like it's, you just expect to lose. Like every trade you should lose. Like it's just a weird thing. Thomas, the edge in trend following literally comes from doing the emotionally difficult thing. Like trend following, you're buying breakouts, right? Like if we get a close above here, just think about how ass puckering that would be to buy. Nearly everyone who's smart would want to wait for a pullback. Like it's okay it would be okay emotionally to go long here. It would be very difficult to have gone long here. And the edge comes literally from doing the difficult thing.
Scott,
Yeah.
without meaning to disturb your focus, if you can, if it's suitable now, if it's not, that's fine, just say so. But if it is, could you just have a look at, or would you please comment on the earlier setup today? It was, it started at 206, there was a Bollinger Touch, and then it went straight down and hit the bottom Bollinger.
Okay.
And then it went and hit the top Bollinger without taking out the first Bollinger high. So effectively it was an RTV after it tested both the lower and the upper Bollinger Bands.
Okay, so this is a not infrequent thing in sideways, in the start of sideways high volatility markets. You can get it to come in, and you see it here on the 10-minute. It's both a retest variation long and a retest variation short at the same time. So these can tie your head in knots. So this is a setup here. I haven't checked if it was high and tight. This is a setup here. I haven't checked if it's trending. I don't think it. Actually, I think it is trending. So I think this was a setup. I'd have to check it properly. And if this was high and tight, I think this is a setup, which failed. And if this was high and tight, as in the target was less than here, you would exit the short for a small profit and get long for a win. Do you want to work out if that actually happened? Because that was kind of tricky, right?
Yeah, it did. I think the second one, there was no confirming evidence on the 10, but assuming there was, then what you say is true. But
hold on. This was at 2:30.
But the fact that it hit the bottom and then the top Bollinger is still okay.
Yeah, it's still okay. 1 sec, I think we're still 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. Okay, so we stop trending there, and then we don't start trending until here. So, okay, so we don't have confirmed evidence. Sorry, my bad. Yeah, both setups are in play. You place both. If you ever have the very rare situation where you have to place both orders, you place both orders. And don't forget, if we're in a long and we get a short, if we're in a long and we get a short, we're supposed to exit the long and get into the short. So it's no problem.
Did you take the short, John? It's a really good question because I just always have in my mind a mental block that when it touches the other Bollinger, then I'm looking for a setup the other way and I forget the other setup, which is bad.
I missed it completely. One of the other guys, I think Chris alerted me to it on the Slack group, but I think that bias comes from the original version of the system where it was a skip, I think. But yeah, I'm the same. I get a bit confused by it all.
I'm willing to admit to that as well. And I will say that those setups are likely a negative edge. They're only included because I didn't want to include fragility in the system by, it's obvious that this thing is not like a regular garden variety setup, right?
And the confirming evidence price behaviour was a bit ratty at the start of the day as well. Yeah,
it's just
spike highs, then the next candles would make a higher close but a lower high, so you weren't trending. And so I had to really drill down to see whether I had confirming, and then I realised, oh, hang on, we've been 20 bars without a new high. I'm not trending on the 10. So
a rule of thumb
it was good exercise, and it kept me out of potentially bad trade at one point.
If it doesn't look like something that you're familiar with, if you have to rack your brain to figure out how the rules work, then chances are it's not like an authentic setup in the spirit of the system, right? So the only reason we're taking it is because we don't want to make our rules with. The reason the system is so good is because we're taking a few shitty setups so that we've got a simple and robust system, right? Like the system was far weaker when we had more rules to get a higher win rate, right? So paradoxically, you strengthen the performance of the system in a risk-adjusted sense by taking these shitty setups and not adjusting your rules. Like it's a real beginner's error, which I used to make, is trying to have a special rule for every situation. I like this one, I don't like that one, but this one's weird, and that one's that, and we've got to remove these ones out because those ones obviously suck. That's a beginner error. It's far better to just accept that we're doing system trading. Some things are going to fit our rules, but not really be what we want to be taking. Like that's just, this is why a mechanical system will outperform on a risk-adjusted basis, but underperform on a win rate basis almost any discretionary system based on the same edge.
Yeah, I think it's great. It takes that, I said it a few weeks ago, but it takes that phrase, I reckon, out of my vocabulary. I don't have to sit here and go, I reckon it's going to go here. And it either meets the rules and it doesn't. And
how about, but for me? But for me, it's not, because so sick of hearing that from students. But for me, it's not a setup because fits the rules, take it. Like it's, and the reason we keep it as simple as we can is as soon as you make your systems complicated, they break. A complicated system would have broken in the coronavirus. A complicated system would have broken in the rally that we've had, which is the strongest rally in 100 years in ES, right? Like literally the strongest in 100 years. Unless you back tested a system, unless your system is very robust, or unless you back tested it on price action like that, it's just pure luck that it's still working, right? Like there's no other way to put it. Like it's just luck. Because unless we designed a system for a 1 in 100 year rally, how in fuck would we expect it to work for that, right? Like it's just impossible unless your system is robust. And to make a system robust, you have to make it as simple as you possibly can, but no simpler than that. That's the way.
I bit the bullet and forked out for the multi-broker license, Scott.
You need to do that too.
What's that?
You need to do that. Use my.
Oh, no, you don't want to jeopardise your license, mate.
I
I got the confirmation through today, so I just got to figure out how to configure it now.
You're using Ninja 8, I take it, not Ninja 7, right?
No, I've got Ninja 7.
Ninja 8's a significant upgrade.
Is it?
Yeah, it's a big upgrade. It's a bit more reliable too, I've noticed. The Ninja 7 needs frequent reboots and okay, we don't have a setup here. Also, one thing I've been experimenting with, which has been working really, really well for me, is I set an alarm, and every 50 minutes at my computer, I get up and I do some stretching and walk around a bit. And I find, especially doing something physical, like some stretching or some calisthenics, I do a bit of kung fu. At the end of the day, I'm not nearly so tired. Like, I'm putting in consistent 16-hour days now, and I'm trading at the end of that, and I'm still okay for trading at the end of that just by doing it.
Was that every 15 minutes, Scott, or 50?
5-0.
Thanks.
And yeah, it seems to be working for me. It was something someone else told me, and it's playing out so far.
So, Scott, I saw that you're up at 3 a.m. How much sleep do you actually get?
I get 7 hours.
Wow.
Sleep is the anyone who's ever been involved in high level sport will tell you that sleep is the one true performance enhancing drug. Like, you can take all the steroids you want, and if you don't get enough sleep, there's no strength there. So what I personally do, and I'm a weirdo, so I couldn't recommend it, is I use a supplement called melatonin, which airline pilots and things take. It's a anti-jet lag supplement, and so you take it, and it brute forces your body clock into a new time zone. So I keep my body clock set to. I'm starting to get sleepy, like literally sleepy by 7, and by 7:30 I want my head on the pillow, and by 8 o'clock I'm long out. And and what that does for me, it lets me, because there's two sides to my business, right? Like, there's trading and there's marketing. It lets me do my long-term trading stuff while the markets are still open, or watch the close, and it lets me get my marketing stuff out of the way, and I get a full day's work done. I get my baselines and shit like that done before anyone even wakes up, and then the rest of my day goes pretty smoothly. Like, yeah.
Wow.
whilst it's quiet, could I pose a quick question regarding a trade from this morning, just to see whether you think this is valid?
Of course you could.
Yeah. Okay. So I know in the videos, some of these trades are there to like test us. So if you take the high at 206, okay, and the first time that became high and tight was actually on the 222 bar.
Exactly so.
Yeah, but it triggered after obviously having touched the lower Bollinger Band. So you have the early high.
Yeah, this is totally weird. And then you have this situation where you potentially have a long setup while you're in the short. If this was high and tight, as in the target was under here, you would exit the short and take the long.
But there's no. I saw that second one actually and was saying about like a stop and reverse, but I don't think there's any confirming evidence on the 10 for that one.
No, there probably wasn't. I didn't check properly.
So as far as you would see it, then the 222 is perfectly valid. It's high and tight.
It's within 20 bars of the old high that touched the Bollinger.
Yeah.
And we discussed this. It's a shitty setup. There's no doubt. This does not look like any other setup that we regularly see on a day-to-day basis. Therefore, it's probably not the same thing, right? It looks different. It fits the rules, but it looks different. So it probably is different.
Yeah, but the thing I would say with that is that we're looking for the mean reversion setups which oscillate between the Bollinger Bands, and in that respect, it's perfect. You would expect the market in many occasions to go all the way back down to about the 88.0 level ish.
Exactly. So this sort of market here, this is just money. So when you see a sideways high volatility market, you almost don't have to wait for a retest. You could enter in a limit on half an ATR outside of Bollinger, and you'd be pretty safe. Like you'd enter here. Yeah. This is a very rare market type. But when you see this, we're like, ooh, I want to trade this. Like I'm not stopping early today. Like this is money.
Yeah, I agree. It's but so already the one that I said earlier on, then you would definitely see that as a baseline trade, though.
Oh yeah.
Yeah, 222. That's okay because I've included it in my baseline, so that was just checking that everyone else was reading off that same hymn sheet.
Andy.
Sounds good, brother. Bye. He's gonna send me a.
Sorry, guys. So guys, what you generally see in trading ranges is two-sided buying and selling at towards the bottom of the trading ranges, like up, down, up, down, up, down, up, 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 down. This is very typical of trading range behavior. So if it's behaving like it's in a trading range, it's probably still in a trading range. Julian's asking, so how long do you stretch for? I do 2 or 3 minutes just of anything physical. So either like, twisting stuff, I do some Pilates, I do a couple of stretches, I do some hip flexor stretches because they get tight when I sit. But it doesn't really matter. I find just doing like 2 or 3 minutes of physical exercise is a brain reset.
How's your new place, Scott?
Oh, it's pretty cool here, man. My wife is happy. It's I sort of when I've hunkered down my lifestyle to build up my trading account, right? So I just got used to living like a very modest lifestyle because I was focused on having enough trading money to save for retirement, and I forgot that it's actually nice to live in I've always lived in okay places, like nothing wrong with it, but yeah, it's a nice time for me, and it's motivating in a weird way.
It's one of the most stressful things you can do too, is move house. So,
Well, not for me because I'm in Thailand and there's an army of brown people who do everything for you. I didn't lift a coffee cup. I walked in, it was all done. In fact, I made certain that I was way the fuck away when any of this shit happened. I think it cost in total 300 and something bucks for an army of little people to come in, pack up all my shit, make sure they didn't break anything, fold all my clothes, put them in the new place, like I literally didn't do a single thing.
how much did it cost?
It was like what was it, 7,000 bahts, and maybe what, 370 bucks or something.
Holy shit.
Guys, any Bollinger Pinch setup, if we get a setup here, is a very good setup. And it's worth noting that we can take a setup in the rules, even if this bar doesn't touch the Bollinger, but a higher close could easily touch the Bollinger here. And that would be an absolutely outstanding setup. And you can see why, right? Like, you know, this falling band hitting it is telling us that volatility is falling to an unsustainable low. That's literally what it is. You can see how explosively it reacted off the Bollinger Pinch, right? Any retest of this is exactly what we want.
Scott, question for you. If you've got when I'm looking at the NQ stuff, at the moment through about 150 or 180 trades, I'm noticing at the moment for the 70 trades that have been Bollinger Touch, there's a really good return. And then for everything, sort of everything else, it's sort of either just positive or forget it. In that situation, do you sort of sit there and go, well, I'm just getting, do you say, well, I'll eliminate these other trades, but I'll keep measuring it, unless an edge eventuates, or what do you do?
That's really
too early to tell.
That's a really good question, and it's a question of statistical significance, right? So the real question underlying all of the decisions about this, oh shit, we gotta pay attention. Let me come back to this. 93 and a half and 85.
You haven't got CE on the 5, have you?
Sorry? Oh, no, we don't.
CE on the 5?
Yeah, nothing on the 5. You're right. Okay. Sorry. So the real question is that you're trying to answer is this real? Like, is it true that the Bollinger Touch works well and the other stuff doesn't? So if you look at the statistics of when Bollinger Touch works well on Euro USD, it also doesn't work. Trending nearly always does not work. So they're very uncorrelated. So I would be very hesitant to believe that that's a permanent situation. Usually it's a temporary situation. So Bollinger Touch, so 70 trades is how long? That's what, like 3 weeks
two
each.
months. 2
Sorry?
months. 2 months for that. It's been a 2-month period that I've been measuring.
It should be taking what, about 80 to 100 trades a month.
Yeah, well, it's sitting at about 180 trades for the 2 months, but it's about 70 of them are the Bollinger Touch. Bollinger Touch is 70 of them.
So let's look at the equity curves run in parallel. Like run an equity curve on them both. But I would be hesitant to. I would intuitively on every other market I've ever seen, trending is a stronger but less frequent edge than Bollinger Touch.
Yep. All right.
So I would be very.
I'll share the sheet with you at some stage.
Please do. Now, there's another option, which Ralph and I were discussing today. He's playing around with the idea of watching ES and NQ, and let's say you took a trade on the ES and it was also a setup on the NQ. If it got stopped out on the NQ, because the NQ moves faster, right? So the NQ often gets stopped out earlier. Jump on the ES trade. So you're exiting for like a 0.8 R loss or a 0.7 R loss instead of taking a full loss.
Okay, yep.
The jury's still out on that, but in other systems that I've seen, Ken Long does that a lot with his systems. He jumps he jumps early when things look bad, and he calls it a sign of weakness exit. And I talk about it in the system. And if you think about it, if you lowered your average loss down to 0.8, that would be a very, very big deal.
Yes. Well, I'm running in the NQ stuff. I'm running at a 0.8. 0.8 R is my stop anyway. Just so far, so that's just my research I did.
Okay, so you're running a stop that's not at the spike low. That's at 0.8.
Correct.
Wow.
Yeah.
Wow.
With a positive effect so far.
Well,
sorry.
How often do you get fucked on that?
Probably 1 in 20 trades or something that hurts me.
Yep. 1 in 20.
It's sort of sitting. My equity curves are.
So what that gives you is the ability to go for a bit of a stretch target, right?
Well, I still go for the target exactly the same as what we work it out. But I place my stop just at 80% instead of 100% of that R. So basically, instead of being 30, it's a 6 R over 2 months, basically, is what it's looking at the moment.
William has an interesting question. He says, have you ever considered other setups other than RTV, RTC, Morningstar reversal pattern? Okay, I've tested a whole bunch of these. I tested about 30 of them that were in that Japanese candlestick book by some fuckhead, and then I gave up because they were all nonsense, like 100% nonsense. There are other patterns that work, and one of those is the double. One of those we have right now. Fake out. Breaking a previous spike high and touching the Bollinger, that's an edge. There's plenty of edges around. So breaking a previous spike low and touching a Bollinger. You could also apply it on higher time frames. There's plenty of other edges in price action, man. The inside bar is a small but real edge. The double inside bar is a strong edge. So you can see here we have an inside bar, a bar with a higher high and a higher low than the previous bar, and then we have a double inside bar which has a lower high than both previous bars and a higher low than both previous bars. Go short on a breakable low, stop at the high. This is a strong edge, a very strong edge actually. You can see an inside bar here, long here, stop here. There are gap edges, which are quite strong, really quite strong, but they're infrequent in currencies. Yeah, There's lots of edges. The danger of applying too many things is when you mix, 10 different setups together, the interaction between them has a lot more luck. So if you think about what we're doing here, we're doing 2 mean reversion setups, which are effectively the same setup, and 2 trend following setups, which are effectively the same setup. So we are blending just 2 things, and those 2 things have a very specific property. And the specific property which we're trying to isolate is that when one works, the other doesn't. That's basically it, because that fits with our logical understanding of markets. Like if you were trading this 5-minute chart and you tried to trade some trend following system, doesn't matter what the system is, or to trade this market in a trend following system, you're fucked. Like you've had a bad day. If you're trading a mean reversion system and you see this at the end of the day, I know you've made money. I don't even have to look at your system, because the biggest influence on trading system performance is matched with the market type. So if what we know about markets is that markets are mean reverting most of the time, right? Like they fuck around a lot more than they trend. And so it makes sense that we're trading mean reversion patterns most of the time. And when those mean reversion patterns fail, we're trading trend following setups. So we have an elegant solution here to try and gain extra performance by adding extra setups would come at a cost of fragility. I'm not quite prepared to pay that cost, because we have something that's working objectively better than any other system like I've shown this to a number of high-level traders, and the immediate response is, why are you lying, bro? Like, nothing's that good. Like, even though the expectancy is pretty normal, like that's about what trading systems do, but the risk-adjusted returns are, off the scale. I think the better way of squeezing more juice out of it is things like, you get a sideways high volatility market. This one you could have gone for 1.5, for sure. Well, actually, no, you couldn't. If this was a setup, you could easily have gone for somewhere up here. I think there's some juice to be squeezed. Are we decreasing volume? No.
Scott, are you there?
Yeah.
Could you just explain what risk-adjusted returns mean, please?
Okay. So leverage is effectively infinite, right? Like if we're earning an expectancy of 0.2, but we're doing it with 20-yard drawdowns, that is not the same as expectancy 0.2 with 5-yard drawdowns. Because you can easily apply leverage and make up the difference, right? So if you look at the way that institutional traders measure their performance, they get measured in terms of Sharpe ratio. And Sharpe ratio is like the home trader version of Sharpe ratio is SQN, which is which is calculating the standard deviation of Sharpe ratio standard deviation of returns compared to the risk-free rate, which is irrelevant now in a zero interest rate world, but it used to be worth something. So anyway, so if you imagine that we take, just keep an eye on if a setup forms and let me know. So we take system quality number. So the system quality number is the square root of the the system quality number is the ratio of expectancy to standard deviation. Standard deviation divided by expectancy multiplied by the square root of the number of trades. Multiplied by the square root of the number of trades, which is sorry, I don't know where I'm going with that. So a risk-adjusted return, either system quality number or Sharpe ratio. You can calculate a Sharpe ratio on your day. You could calculate a Sharpe ratio on this number, this number here, would tell you what is your return for a given level of risk. So institutional traders don't really care. Like institutional traders don't like Bitcoin because sure, it might go up a lot, but it goes down a lot. So if you're an institutional trader and you lose and you have a 5% drawdown, typically they cut your capital allocation in half. And if you get a 10% drawdown, you get fired. Like it's literally like that. So if you think, oh, it should be easy to make 20% a year, is it easy to make 20% a year when you get hauled into the principal's office for losing 5% and at 10% you're out the door? Is it still easy? And the answer is no, it's not. Like it's a drastically harder game when you're not allowed to have drawdowns. And if you ever take investor money, not that I have, what you're going to find is that investors pretend that they want a love affair, but they really they're a one-night stand. So investors freak out at the tiniest drawdown. We have to prep an order here. Yes, we do. Okay. 90 and 90 and 4, so that's 4 for 4.5. Alrighty, and a minute to go. It's probably going to break the high. And trades off the table. And we're in decreasing vola. And we start walking up the band in 2 minutes. So William, this would be an example of a potential edge is walking up the band on all 3 timeframes. Might be an edge. How would I play that? I would enter on the open at the next bar and exit on the first bar with a low not touching the Bollinger. That would be worth testing if you're looking for more edges. William, I tested the Bollinger on its own with no confirming evidence, and it was a slight edge, but not enough to overcome commissions. I think with multiple time frames, it's probably worth a better shot.
This is set up, yeah, Scott?
Yes, it is. All right. Okay, the high is 5.5 and the low, okay, so 5.5 for 6. Let's do this. Okay, 3, 2, and placing. Right, we are on. That's a fucking nice setup. Oh, yeah. Of decreasing vola. So in a perfect world, we might hit the target here. And then paint a reversal. Everyone hit the target okay? So I'm talking about 2 from 2 today. We may pop back into degreasing violet here, or we may paint a reversal setup. Need to be alert for a shooting star here. I would prep an order just in case so we don't look like fuckheads. There we go. So 11 and 15 and a half is 4.5 for 5. Perfect. All right, and that has a minute to go. This could easily be a shooting star, right? Thirty seconds to go.
5 for 5.5 on us.
Yeah, it's not gonna be a shooting star now. Chris, that ATR trick does really, really work. It's an amazing upgrade. Anecdotally, inside bar in a strong trend is a strong edge too. So I would expect this to break the high now. So if it doesn't break the high, it's 4.5 for 5. Hey, 1 minute to go.
Hey Scott, how you doing? Chris?
Hey Chris, how are you, bro?
Yeah, I'm good, thanks.
20 seconds to go. You got to prep this order.
Mm-hmm.
That's a nice looking setup. Three, 54, 5. Sorry, Chris, what were you saying?
No, I wasn't saying anything. I was just saying hi.
Oh, cool. Yeah, nice to hear your voice. How's trading?
How's trading been? Yeah, yeah, it's been good. It's been good.
Yeah, soon enough we'll be whining and crying again. So yeah, enjoy it while it lasts. The big thing we can take away from this current period of super performance is you're going to do something which you haven't done before, which is not get carried away, not raise size, not expected it to go on forever,
Yeah.
not be disappointed when it changes. It's just like, this is just the season, right? Like,
Yeah.
It's high summer. Winter is coming.
Yeah, but we know that they're very short winters.
Indeed.
So, quick question from that trade early on. I posted on the group. Do you see that trade at 320?
No, but let me check. At 3:20 today.
Yeah. I don't know if you guys were on the group at that time.
Yes, we were. Yeah.
Did you guys all get on?
Yeah, we got on, but it was a pain in the ass for me. I missed it.
I missed it.
The order, and so what I do is I leave it as a limit. So I had several ass puckering moments where I came down to here, and then it actually came back and got me in.
Okay, because I put a limit order on as well, but it never quite brought me back up. It almost took me back in, but I missed it. And then by that time I'd missed it and it had pushed down. So I did post it on the on the Facebook group as well to say that it was fucking annoying.
That was fucking annoying, yeah.
That was annoying.
And the previous one was almost, but not quite as.
Oh my God, exactly. I mean, like, yeah. Daniel, who's on the call, said, "Dad, we need to change the rules." I said, "Yeah, okay. You need to trade another system."
Yeah. When you see it 20 times, you can change the rules. You can't change anything for one.
Yeah, maybe like you say, when you're a real pro trader at this, you could probably, that's one of those discretionary trades you could just allow yourself.
I've just resigned to the fact that I'm never going to be that good. Like, I don't need to be that good. I'm doing fine.
Yeah.
You know,
I mean, that's true. It's a great setup though, right? It's like, you know, it's a hammer. Yeah.
Yeah. If you gave yourself a few bullets of discretion, you would have made an extra R. How much day-to-day stress and strain does it put on you having the ability to bend the rules? Even if you're only going to bend the rules twice a week, you know, hours and hours a week, you're asking yourself, should I bend the rules now? Should I bend the rules? Should I bend the rules? And, you know, I had discretion in Thor, and discretion on average gave us 2R a month. It was definitely worth doing. And it's definitely doable if you keep the discretion in very small, like, you can't just get the freedom to do whatever you want. It has to be like a reason for the discretion, and they have to fit into discrete categories, and you have to have a name for it already. And, you know, you can put a lot of structure around discretion.
So there almost has to be a rule on discretion, because I agree with you. You could do that and you could have a winner, and then you go, okay, I'm going to do that again. And then you have a loser, and then you start second guessing yourself. And then, like you say, it just fucks with your mind, right? From then onwards. It's just not worth it. I don't think I would ever do it personally.
I will do it. I will add, personally, I will add discretion in probably another year, I think.
Okay, maybe. Yeah, okay. Done.
But I'm not talking like discretion, like do what you want. I'm talking, you know, define categories like that thing where it was like, that was an equal low. That looked like a retest of the lows to me. It just didn't fit the rules. Like,
yeah.
You know, maybe a hammer that's you know, a tick, a half a pip away from ADMA because the market is so strong, it's just not pulling back that hard. Like that kind of thing.
Yeah. It's almost like a rule around the discretion, right?
The last thing you want to be doing, and what I've found is when you get to take credit for something, it's very weird. Like, I don't know about you, but I don't feel a lot like I just had 2 winning trades today. I haven't even thought about it. I haven't taken credit for it. It doesn't feel like I did much. It feels like I did my job, like I've done my job today.
Mm-hmm.
You know what I mean?
Yeah.
But when it's discretion, there's nowhere to hide from that. Like, fuck yeah, I got it right. I bent the rules and I fucking came out ahead because I can bend the rules. I'm a good-looking rebel who plays by his own rules. You know, and you just start to feel a bit like all that.
Yeah. And you kind of don't want those feelings when you're trading a mechanical system.
Fuck no. It's nothing more harmful to your trading career than thinking you understand this and you got this all figured out and you can do this right. Like it's a game that's almost designed to make a mockery of you when you start thinking that way, right?
Yep. So, quick question about that post you posted about expectancy and average win rate. So, expectancy I've seen expressed as I expect to win X amount of dollars per trade, right? So if you say I trade for $100, you count up the number of winners, number of losers, the average amount you've won per trade, average amount you've lost per trade, and you put all that together, and then eventually you get this figure that says this system I expect will win $100 per trade over time. So, but you express it differently, right?
You can express it both ways. They're both an identical thing. I believe thinking in R is more beneficial than thinking in dollars, simply because if you're doing fixed fractional position sizing, your numbers are all skewed because the system made money, so your average position, the system made 100% in a year, so your 1% position size doubled in a year. So your average metric of how the system went is actually skewed because of its strong performance. So you're getting an upward bias.
Right. Okay.
If you know what I mean. I mean, both are perfectly adequate and valid ways of measuring it. So I take an average of all the, total R divided by number of trades, you can make it total money divided by number of trades.
Yeah. Yeah.
The same thing.
Okay. Yeah, it's just that expressing it R is much more generic, right? Because
R is made for people doing fixed fractional position size. If you are risking one contract per trade, or if you're risking one contract per trade or a fixed amount per trade, dollars would actually be a better metric. But most people don't do that.
Yeah. Okay.
Just my own experience is that thinking in R really goes a long way towards taking the heat out of it. You know?
Yeah, yeah. When you take off the monetary value, and
I didn't make $1,000 today. I made 2R. It's not it doesn't feel the same.
Yeah, yeah.
So Thomas has an interesting thing in the chat. You know, he's a logical thinker. 99% of the time, he doesn't have emotion when he takes his decision. The issue is I really don't know how to handle them when they come up. And discretionary is the open door to emotion. And clearly, I won't be able to do it. So the trick with emotions in trading and in general is that what are we afraid of? We're afraid of acting emotively and doing the wrong thing, making the wrong decision under the heat, under a panic situation, like rushing for the exits in a crowded building when we're all just going to trample each other and cause a stampede and nobody gets out and everybody dies. Like, that's a poor decision made under stress and pressure because we're panicking. So to avoid acting out on your emotions in trading, there's an easy hack, is you just express them. So often, you know, Chris will tell me, I'll tell me, oh, fuck, I've got the shits with that fucking trade. Motherfucker, fucking cunt. And one fucking tick, fuck you. And so I'm angry at that trade. Like, so what? Just getting angry at it, getting upset, getting sad. When those things come up, just feel them. Express them to another person. You know, you don't feel the need to act out on them. A big part of, you know, why people do things like, if you think about why someone might do something like remove a stop, like take a stop loss away, you know, and I've done it myself when I started trading a trade's about to hit my stop, I didn't want to feel that feeling of loss. I didn't want to feel the feeling of shame from having a losing trade. So I just pulled my stop away and moved it down. And that's me trying to avoid a feeling. And any time that you try and avoid the feeling, you end up getting double of the same feeling. So you try and avoid that feeling of shame by hiding your losses or hiding your mistakes or moving your stops, and you just end up getting it more. You don't like feeling powerless over the market, so you want to mess with your system, and you end up feeling even more powerless when your system would have worked, and your discretion doesn't. So it's possible to be a good discretionary trader. I'm not personally, but it's possible. And the way to do that is to feel completely and utterly every emotion that you have, which is a big ask. And if you know, I can do it for a day or two here and there. No chance in hell I can do it for a month straight. You know, maybe other people are better than me, but
Scott, with the SQN and the expectancy and the sharp ratios and all that, what is there a good spot to learn all that? Is Investopedia like a good spot to try and wrap your head around that sort of stuff?
I'll send you some stuff on it. I think I've probably got some videos I can share with you. I'll have something somewhere. Just Google system quality number. Let me do it now for you. Let me Google that for you.
Yeah, Ben Tharp's got some good videos on YouTube on it. He's your man.
Is Robert Barton.
Thanks, John.
Hello, my name's RJ Hickson, and I'm one of the instructors at the Van Tharp Institute.
You know that guy, right? Let me send this in the chat. RJ built a very good volatility breakout system.
Thank you.
John, while we're talking about SQN, I find a better number than SQN for like back of the envelope sort of measuring system is the ratio of expectancy to standard deviation, and then I multiply it by 10, which is to approximate 100 trades in an SQN. So if expectancy divided by standard deviation in brackets multiplied by 10, 2 and above is typically a tradable system. 2.5 is a good system. 3 is a kick-ass system. Those are the rough metrics that you're looking for. 4 and above doesn't happen.
Yeah, Scott, just on that, I remember, I think Van said that I think if it was over 1.65, then your system makes money at a greater than chance level. If it was above 2, then it was a really good system. And if it was over 2.5, then it's a great system.
Well, I think that was... I would take issue with some of that. So his number artificially favors systems which take more trades because it's because system quality number without SQN 100 reward systems that take a lot of trades and penalize the systems which don't take many trades at all. So Van told me that he thought that capping the number of trades at 100 is probably a decent idea. I would not have thought that 1.65 would be a very marginal edge. What I look for as what I would call tradable, like okay, this is a system that, you know, like if it's 1.65, it might make money, but like if you can walk down the street and find literally any average system that's doing better, you wouldn't trade a 1.65 system. I've traded SQN2 systems, and they're okay. Like SQN2 systems can be expectancies around 0.2, not significantly better or worse than our expectancy, just with bigger drawdowns. You know, so if you're making the same kind of money as we're making, but with bigger drawdowns, that wouldn't be the end of the world. Like those are tradable. Those are tradable systems, right? 2.5, I'd agree with him. 2.5 is excellent. Let me pull up our numbers so you can see it.
Anyway, I was just watching one of his latest videos. He's been doing weekly releases, and RJ actually said today that you don't need a system that's like 4, 5, 6 SQM 100. He says, you know, a 2 is fine. He says because what's more important if you've got a system that's 2 is your position sizing, because that's more important for reaching your objectives, which is true.
Well, this is a game where Van doesn't know what he's fucking talking about.
That was RJ, sorry.
Well, RJ learned from Van, and around this stuff, they do this stupid fucking exercise in all their seminars where they get, you know, you get a bunch of dice and you roll them, and each, you know, you get a bunch of R values representing trades, and you roll
marbles.
The marble game, yeah. And okay, so what's the big assumption in that is that everything's random, but you and I know absolutely certain that that's bullshit. The last 2 weeks, you know, we haven't had barely a losing trade, and yet there have been weeks when you couldn't buy a winner. So what happens in the real world, which is very different from that stupid fucking marble game, which is a scam, is that both your winners and your losses cluster. So your drawdowns are bigger and your winning periods are bigger than you would expect. There's absolutely nothing random about the distribution of your trades, right? Like if you're trading a trend following system and you get a trend that you don't have a 50-50. Your trend following system has a 25% chance in the long run of hitting a winner. But if you've got trends across the board, that percentage goes up to 70, maybe even 80 for a brief period of time, right? Likewise, if you don't have any trends, your winning percentage isn't still 25, it's more like 15. And the same with mean reversion. Like if you get a trend and you're trading mean reversion, the odds of getting a winner are scant, like very low. So nothing fits in. I think that the branch of maths is Bayesian probability, and there's a measure of, if you want to test how susceptible your system is to clustering, like whereas the wins and the losses cluster together, you can measure what's called dependency, which is what are the odds of a winner following a previous winner, and what are the odds of a trade following a previous loser. So let's say we've got a 50-50. Let's say we've got a 50-50 system, but after a loser, your odds of another loser aren't 50-50 anymore. They're probably 55-45. And you can measure that. You can make an exact number of it. And every time I've tested dependency in any system that's legit, dependency is strong. Now, one of the measures of whether or not you have a real system and not just some sort of curve-fitted bullshit is, do you have this dependency? Because one of the things we know about real systems is that real systems actually exhibit this biased behavior where they do really, really well and then they suck. Like, can any of you think of any good system that doesn't go through stretches of working really, really well and then stretches of sucking? Like, I've certainly never seen one. So you can actually measure for that behavior and use that as a proxy for, is my system complete curve fitting? Is it just nonsense? Am I just, hitting a lucky streak, or is it a real system? And dependency is an interesting way to do that. Van also has some other weird things. He told me that he thought that a 50 trade back test was enough on a discretionary system. It's like, no, that's not enough. It's just not. It's not for the simplest system, let alone the sort of complicated systems he was getting people to design. He also doesn't think that it matters what sort of edges you use in your systems. He doesn't believe in scatter plots. There's a bunch of stuff that is really questionable about his approach in the fullness of time, but he's got most of it pretty right, and some of it was groundbreaking. But yeah, I mean, in my opinion, and I think it's accurate, is you don't have any business trading a system until you've done a substantial backtest. Hit the target. Yay. All right, guys, that's 3 from 3. We're going to push the luck and go for one more long off the bounce. What do you reckon?
What's your opinion here, Scott? I've rolled this around in my head thinking, if I get to the point where I'm trading decent size R's and I've had a day where I'm 3 from 3, is it time to clock off early? Where do you sit on that sort of stuff?
I'm doing, the way I trade right now is what I would consider to be the wrong thing. So it's probably a case of do as I say, not as I do. Like, I clock off when I feel like it and I use a bit of judgment there. And I clock off when I'm tired, and I clock off when my wife wants me, and I clock off when I'm feeling busted up from fighting that day, and I clock off for all kinds of reasons. I clock off when I'm hungry. I probably shouldn't. For me to be more professional and to be a better trader, I should probably have fixed hours.
It's just more that concept. You've got 3 from 3. A 3-hour day is pretty, probably above average system-wise.
I agree with the concept, because if you look at when you're having a good day, you tend to have a really good day. To me, look, I can see the argument. like, to me, it's another one of those things that opens a bunch of doors. In terms of your system, in terms of pure maths, it adds an extra layer of fragility. So how do you go back and back test? So go back and back test. If you wanted to be real about it, go back and back test how often that happened. Like, look at every day. You know, we've got every day with more than 3. Look at what happened at the end. And William's saying, isn't it like throwing dice? It doesn't matter if you've got 3 wins. No, it's actually not, because what we're discussing is that both wins and losses in trading systems cluster. So what we're seeing at the moment is we've got a period of very good system performance, but we've got periods that we've previously had where we've got very bad system performance. All right, now that we've said it like that, I'll probably stick around for this next trade. Because I'm not afraid of wiping out an R on my day, because I am not a fearful trader. I trade my rules, and I do not give in to fear. And I exhibit courage in the face of fear. That's what I do.
And it's an interesting topic, because in real life it's a bit harder to, you know, to be 3 up and say, oh, okay, I'll keep going. But that's ideally what you should be doing, I guess, because I can't remember his name, but it was a famous trader. He said, you know, really good days don't come along that often. So when they do come along, you have to, you know, you have to push it. He says it's like playing poker. When you're dealt aces, you have to play them like aces. So when you're having a good day, you've got to go, you know, foot to the floor type thing.
Right, like it's not just luck. Like we haven't got a lot of luck in trading. What makes a good day conceptually is a day where our system fits with the market type. And you know, we said right at the start of today, you remember we were talking about it. This is a very good market type for our system. This is a day where we want to take a lot of trades and we want to pay attention. We want to take everything there is. Like, we actually said that, and we have taken a lot of trades, and we have had a strong edge. Exactly what we set out to do. So is there a reason to stop? In the absence of fatigue and time constraints, probably not a reason to stop yet. You know, I would expect the next one to be a loser, by the way. Okay, so let's just start adding up this one. We've got 45 seconds to go. 8.5 and 2 is 6.5 for 7, and 7 plus 8.5 is 15.5. That's okay, just past the old highs. In place. So 6.5 for 7. Okay, so if this doesn't break the lows, which it probably will break the lows. Is it breaking the lows? No, we're equal here.
Not yet.
We need to prep another order just in case, because it's going to be a substantially different position size.
May drop into DV though.
Oh, really? But we're trending up on the 5 and the 10. The cash.
You're very good, Scott. Have you done this before?
Maybe.
In fact, this is going to be a real minimum viable trade, right? It's only 2.5 pips.
4.5. Yeah, it's going to be a real minimum viable trade. Stop loss 3, profit 3.5. Okay, 20 seconds to go.
Order cancelled.
Ooh. We on?
Nope, I missed it.
Order cancelled.
Selling the other order. Before I get a double fill, which would be terrible. How'd you miss it? You're going to get a fill here, though. I hope you've got a limit on.
Yeah, because of this order panel thing that I use, I have to readjust the lot size. I have to change from
Okay.
the money to the lot size. I have to change the take profit ratio to an exact price, and all sorts of things. And it's just too much to do. I always struggle with these very small minimum viable trades, to be honest.
Dad, I managed to get it on.
Shut up.
Is that some mud in your eye?
Fucking hell. All right, I'm going home.
And I'm sitting around the pool in Spain.
Yeah, okay, very funny. Shut up.
Shut up. Fuck you.
Can you kick him out the grid?
Bang.
And there you go. It's a winner.
Wow.
Lovely.
Well done.
Oh, so we're all going to stop at 3 from 3. Just imagine what a cunt you'd feel like now if you did like. And deservedly so. There's no, like, if the system takes a losing trade, it's not your fault. If you decide not to take a trade because you've had too good a day and you don't want to face a losing trade, that's just you being a cunt. There's nowhere to hide from that. And that's going to hit you in the feels much worse.
Yeah, I'll cop that. Hey, I had an interesting one there, Scott, where I had one order on. I had the higher order on, and then I placed my second order, and I went to click to cancel the first order because it was higher, but it was bang on where my take profit was. And I accidentally clicked the take profit out of the way instead of the cancelling the other order.
Yeah.
So it was in profit. I just flattened the whole deal, which I think was the right thing to do.
That's the right thing to do.
Because the stop loss wasn't showing there either. So I was naked in the wind.
What I would do in the future is try and first of all reset your stop, and then reset your target. And if you can't do that in the time that you've got, then flatten it.
Mm-hmm.
So the flattening is for when you're in a trade that you shouldn't be in. If you should be in the trade and you're still in the trade, principle tells us that we should try and adjust our orders and get it.
Yeah, I guess I just panicked in the moment.
Yeah. Small thing, but so what causes panic when trading is when you haven't war gamed out something that can happen. So now you've seen that, it's really important to stop, and maybe tomorrow after it's all settled down, have a think about what happened, have a think about how it felt, and just go. And so next time this happens, you'll go, oh, I've felt that before. I know that feel. I know that situation. I've got a procedure. So you want to be like an airline pilot who doesn't panic when an engine cuts out. You're like, oh, I know what I have to do. I've got a checklist. You know, and you might not have a checklist, but you still know, okay, am I in a trade that I shouldn't be in? Well, if I am, I've got to flatten. Well, no, I'm not. I'm in a trade that I should be in. I just don't have any orders. I just don't have my stop and my target. Okay, so which one is in danger of being hit first? I probably would have said, okay, my target is in danger of being hit first. So let's get that one figured out. But you could also make an argument that safety is first and get the stop loss on first. So doing those either way would be acceptable. What matters is that you have a procedure and you follow that procedure. And that now you've learned something that you can apply the next. Like, that's what we're doing, right? Like, we're learning something every day that we can apply tomorrow, and we're just storing this in the bank. Yeah, storing it all in the bank.
Yeah, absolutely.
Guys, I think that was an excellent day of trading. I think it was a very challenging day of trading, and I think you've all done really well. And we painted 4 from fucking 4 because we rock, and yeah, I think that's a nice place to stop.
Yeah,
Excellent. Thanks, Scott. Thank you.
All right, guys.
Sounds good. Thanks, Scott.
Yeah, great day. Good job, guys. Really good job. Proud of you all.